We were chatting about that gold price, and strangely enough, also because it's still holding at 1,540, we had Anglo Gold down by over 3% this afternoon. We have Harmony also weaker, and that's despite positive news coming out of Anglo Gold that it expects a tripling of its profits for the first quarter.
I think what you need to put in perspective with something like Anglo Gold is, you know, the market looks forward and anticipates, you know, these kind of quarter productions that they released, these figures that they released. So if you just look at it in perspective, I think investors were very concerned about how the company would perform, taking the hedge book out of the way, and obviously on the back of a very strong rand, and you know, you've got very rampant gold prices at the moment. Is the company actually making money? And if you drill down into the statement and the quarter production, into the actual figures, you find that production was pretty much in line with what they sort of gave the market indication to. And you know, what you can look at is costs actually ticked up slightly a little bit. So if you look at it in the big picture of things, I think the market was anticipating less increase in costs. They're operating with a very significantly strong rand, which really impacts the bottom line on a company like this and all the gold shares at this point. But personally, for me, I don't really pay too much attention or focus a lot of my attention in the gold stocks. I think with the rand where it is at the moment and the costs that are involved to extract the gold with that kind of deep level mining is just too much of a risk to me from an investor point of view. And you know, you've seen the gold price so rampant over the short term, but nothing really has happened to these gold stocks. Despite Harmony, I think Harmony's moved from about 85 towards 100 plus. So yeah, it's not a space that I focus on, but also I think, you know, it moved down in line with what I expected on the back of that report.
Perhaps just using Anglo Gold as an example though, with companies coming out with their results, do they really have to beat expectations for the market to reward them? Because there seems to be so much priced into our market at this stage.
Well, that's the risk that you ran at the moment, where a lot of the sentiment is quite positive. We have had quite a strong run up to the levels that we saw us close last week. And the market tends to almost look too far forward. And I got the sense that our market moving into May was kind of sort of pricing in a little too much optimism at this point in time, because if you look at it over us coming out of the financial crisis, you've got the low base effect that's now out the way, and it's really quality of earnings that are going to drive companies fundamentally going forward. So they're not really completely outshining in terms of beating expectations, and if they are beating expectations, it's already priced into the market. So from here on out, you might find a bit of consolidation for fundamentals to really catch up to the share prices that you're seeing in our market, and you might find a bit of a choppy trading sort of environment for the next 8 months for these fundamentals to catch up. So I think, yes, it was a little bit too optimistic moving into May. Bit of digestion is probably due, but it's pretty much a fence sitters market at the moment. The sentiment is moving from very positive to very negative, and you can almost trade those extremes at this point in time.
So you would expect the market then to move sideways for the rest of the year, really?
I think so. I think what you need to do is really place key importance on when you're starting to see this inflation, is what you're seeing at the moment, come to the fore, and the likelihood of when you're going to see that first interest rate hike. So, you know, that's coming towards the end of the year, where you are due for some form of an interest rate hike, which tells us that the economy is growing and you've got inflation that's kicking in at this point in time. So until you start to see that, or on the lead up to that, I would like to see our market move, you know, possibly another 8 to 10% higher from where we are in a very optimistic situation. But again, maybe even finish the year relatively flat from where we are at the moment. So it is going to be a very flat sort of sideways movement moving towards the end of the year. That's my forecast.
Quick word on Mr. Price. It says full year profits will be up to 53% higher. But then again, with the retailers, a lot is already priced into those shares because they are sitting on pretty lofty PEs. Those shares were up 2% this morning, but like the rest of the market, retraced lots of those gains during the afternoon.
Yeah, I think if you just look at the guidance that they gave us today in terms of their trading update, and you sort of factor in what PE they're sitting on at the price that they're sitting at, and you take the midpoint of what they forecast there, it looks about just over about a 16 PE, which is quite lofty and fundamentally expensive. So you ask yourself, where are these retailers going in the next sort of 12 months, and are they going to surprise to the upside? My guess is they're not going to give you great outperformance, and you know, maybe if you've made some good money in the retail space, it's a nice time to start, you know, taking down some of your exposure there and maybe looking into your commodity space. So, you know, as we chatted earlier, demand for commodities is probably increasing. You know, not taking all your exposure out the retail space, but just, you know, locking in a bit of profit. So I think, yes, it is fundamentally full. Prices need to maintain themselves while fundamentals catch up, and that's where that next sort of 8 months could take us. And going forward, as you start to see a bit of interest rate uptick, that's really driven by growth by our domestic economy, and that could drive our market further towards even that 40,000 level.